Good morning, Dr. Basu. Thanks for joining me, offering your insight to CONEXPO-CON 365. It's been quite a year in the construction industry. Everyone's been affected by COVID-19 pandemic, and although construction was deemed essential, the pandemic exacerbated some existing challenges in the industry. So first off, it's been a year of this pandemic reality, and we're finishing the first quarter of 21 pretty soon. In general, how far has the construction industry come since the uncertainty and the struggle of spring 2020?
Oh, a long way. While it is true that construction was deemed, broadly speaking, to be an essential industry, the fact of the matter is that if you look at the construction data from March and April, they look terrible. So many project interruptions, of course, as some people became COVID-19 positive on Teams. Some projects were postponed, others were canceled outright as financing dried up in the midst of that crisis period. And so it was the case that there was some significant dislocation. Moreover, it was not the case that construction was everywhere deemed an essential industry. It was not in Pennsylvania, Massachusetts, New York, New Jersey, and California, for instance, under certain circumstances. So big losses, and indeed, over the 2 months between February and April of 2020, the industry lost almost 15% of its jobs. Now, since that time, it has really come back a long way for a number of reasons. One, contractors are better able to deal with COVID-19 and try to keep team members safe. Two, there has been a boom in residential activity. Three, the broader economy has begun to recover. And finally, the outlook looks quite good for construction going forward for reasons we can get into.
Great. And yeah, before we get to looking forward, I'm still a little interested in a little bit of the past and the present and how we're doing. So how would you characterize how construction stands in comparison to other industries, in North America? For instance, hospitality, entertainment. How's construction faring compared to those?
Well, there's no comparison. I mean, the segment that has been most ravaged by the pandemic, of course, is leisure and hospitality. That includes restaurant jobs, hotel jobs. Obviously, we saw a lot of retail bankruptcies also last year. J. Crew, Neiman Marcus, J.C. Penney, True Religion, Pier 1, Francesca's, Lord & Taylor. I mean, so there are some industries where people cannot work remotely. It's about in-person experience. That's true in retail. That's true in the hotel sector. That's true in the cruise ship industry, which has lost about $40 billion in revenue over the past year alone. So construction, compared to that, of course, has fared very well. And certain construction segments, like single-family home construction, they've actually boomed during the pandemic for multiple reasons. One of the implications of 2020 and the pandemic was lower interest rates, lower mortgage rates. More people of course, saw that and wanted to take advantage of that, but they also wanted to social distance more aggressively. Easier to do that from a home than an apartment building. They wanted more space attached to their residence because they wanted space for home office. They wanted space for a home gym, or just because they were spending more time at home. And again, the typical single family home, whether a townhome or a detached home, has much more space than the typical rental unit. And then, the millennials have come of age. So the oldest of the millennials will turn 40 this year. And so given all of those factors pushing people into the suburbs and into home ownership, obviously that stimulated some construction activity.
Definitely. What would your message be to small to medium-sized contractors who still might be getting through challenges presented by COVID and the current economic market? And, what steps can those small to medium contractors take as they continue into 2021's second quarter?
It depends who they are. Are they residential? Are they commercial? Do they depend upon new construction, or do they work very much on the rehabilitation of existing structures? Because the outlook is very different across those segments. I'll tell you something. I think commercial construction is in a bit of a crisis. I mean, I'm talking about the construction of new office buildings, new hotels, new shopping centers. With all that retail bankruptcy and all that vacant retail space, shopping center development will be moderate for some time to come, or minimal. Hotels, of course, have been devastated by low occupancy rates. And while I think leisure travel will bounce back rapidly this year, in fact, it's going to be an incredible comeback for leisure travel around the world. I think business travel will take some time to take off, as many businesses find that their balance sheets have been negatively impacted by the pandemic, and they're going to look to trim costs to try to rebuild that balance sheet and their cash positions. And one way to do that is to cut back on travel. And then with the specter of remote work, I have to think that the demand for new office space is not going to be particularly significant going forward. So it depends who they are. If, however, they depend upon the rehabilitation or improvements to existing structures. So there are a lot of Class B office space owners, Class B office building owners who will look at the world and say, look, I got an opportunity here to capture some of these tenants who have been sitting in Class A and Class A plus space, but are now looking for less space. They're looking for a suburban location, and they're looking to save money. And I can offer them that value proposition, but I need to invest in this building because I haven't been doing that. And I need to improve my HVAC system. I need to improve my public lobby, my restroom, so on and so forth. All those shared spaces. It can be a really busy time for certain contractors, particularly HVAC contractors. And if they are in the residential single-family home building market, the single-family home building market, forget about it. They're going to be very busy. Their challenge is going to be having enough team members to get the work done. That segment's going to boom for quite some time.
So I am quite interested in non-residential, as you mentioned. Faring a little not as well as residential construction. And I know ABC reported last week that the industry lost 61,000 jobs in non-residential construction in February. In your bottom line video last week, I know you said it was more of an aberration. But still, I'd like to ask, what are 2 or 3 reasons why non-residential should kind of look forward to the future and have a little bit of hope as 2021 progresses? I know you mentioned that leisure travel might be improving, but what are some other factors that might affect non-residential?
Yeah, so there's some segments there of obvious weakness, and we've talked about them: hotels, office, shopping centers. But there's some other segments that stand to be very strong going forward. Where to begin? How about data centers? I mean, one of the things about living online, and more of us are living online, people are paying thousands of dollars for digital images now, right? I mean, people are paying more than that, as it turns out, for Bitcoin, right? So we're going digital economically, and at the backbone of that digital migration, including the migration to the cloud, are data centers. So data center construction will be fast and furious. One of the other implications of 2020, of course, was the rapid market share gains of e-commerce. And what does that imply? Fulfillment centers. So you're going to continue to see a lot of large-scale fulfillment centers under construction around the country. But there's more. What about healthcare? So for many, many years, the game in American healthcare was to put downward pressure on the cost curve. And that meant investing less in hospitals and more in outpatient centers, outpatient clinics, outpatient surgical centers, so on and so forth. And that may still happen. But I think the pandemic has laid bare the fact that we have cut too much capacity out of our hospitals, that we don't have enough ICU beds, we don't have enough ventilators, and we don't have enough space for those items. So what that means, I think, is you're going to see some hospital expansion projects going forward. And then finally, I'll mention manufacturing, because there is this reshoring that's taking place back to North America of production that had gone to Asia, including, of course, China. We've seen a lot of reshoring back to the United States of America since at least 2010. And I think you're going to see even more reshoring of manufacturing activities back to the United States going forward, as many CEOs are tired of repeated supply chain disruptions and moreover want to better protect their intellectual property. It also makes a difference that Congress in late 2019 ratified the USMCA, the new NAFTA, which creates greater incentive to bring the supply chain back to North America to take full advantage of favorable tariff treatment. So you put all these things together, there are some segments of non-residential construction that stand to be really quite strong.
Okay. Yeah, so you mentioned manufacturing, healthcare, and another one in non-residential I want to talk about is infrastructure, because part of non-residential, and obviously yesterday, the American Rescue Plan Act was signed into law. How do you expect the billions of dollars that are being earmarked for infrastructure in that bill, how are those going to help non-residential?
Right. So, last year, 2020, there were 3 major stimulus packages passed. And the last one was in December of 2020. But none of them offered general fund relief to state and local governments coming out of the federal government. Don't get me wrong. There was lots of money going from the federal government to state and local governments, but it was prescribed money, and often money to try to bulk up short-term healthcare capacity, not so much about broader infrastructure. This latest bill, this latest package, the American Rescue Plan Act, also does not have really an infrastructure category per se, but what it does offer, among other things, is $350 billion of general fund relief to state and local governments. Now, they can spend that money in many ways. They can give raises to government employees, and actually some governors have already proposed that. They can spend more on unemployment insurance, on healthcare, on affordable housing, whatever it happens to be, but they can certainly put more into infrastructure because of this. Remarkably, many state governments actually didn't perform that badly financially in 2020. Their income tax collections were strong, as many white-collar workers kept their jobs and kept paying taxes. The stock market boomed, housing values climbed, and then Americans bought a lot of retail goods last year. Happened to be online, as it turns out, but they are still susceptible to taxation. So all of a sudden, this $350 billion comes in. I would think that some of that money is going to be spent on infrastructure, roads, bridges. School construction will be a major winner, because the Department of Education got a major sum of money from this, and some of that will be spent on ventilation systems and other forms of school construction. So those are some of the segments, the public segments, that stand out to me in terms of being quite strong going forward.
Okay, great. So yeah, we've mentioned quite a few different sectors in non-residential that maybe commercial contractors who weren't focused on them before can hopefully move into. So our site recently explored the ongoing skilled labor shortage in the construction industry. We know that in December 2020, 13,000 more workers quit their construction jobs than were laid off or discharged by their employers. What effect has the pandemic had on construction industry's labor shortage?
Yeah, you would think that it would be a benign impact. In other words, the principal complaint of contractors coming into 2020 was they couldn't find workers, couldn't find electricians, plumbers, pipe fitters, glaziers, roofers, superintendents, and then sure as heck could not find estimators. And they couldn't find HVAC professionals. So that was the principal complaint. And one might think that in an industry that's lost 300,000 jobs over the past year, well, that problem is solved, that we would now have enough skilled craftspeople out there. That's not the case. The past has demonstrated that when construction workers lose their jobs, they have a tendency to leave the industry altogether. These are often really versatile people. So I'll give you an example. We lost a lot of construction jobs during the Great Recession, that 2008, 2009 period. The Census Bureau conducted a study of what happened to those dislocated construction workers and found that by the year 2013, 60% of those dislocated construction workers had left the industry altogether. Some found jobs in other industries, oil, natural gas, retail trade, logistics. Others simply retired. And the fact of the matter is that we still have this structural issue in America of not enough young people entering the skilled trades. That hasn't changed. And we have a lot of older construction workers who continue to march toward retirement. That hasn't changed. So you put all those things together, I think going forward, you're going to see a major struggle to find enough construction workers. And of course, the economy right now is still partially shut down. When this economy reopens in earnest, watch out. Those skilled construction shortfalls could be sharper than ever.
Yeah, I mean, what does the future of construction look like if the labor shortage continues?
It'll become more automated. I mean, necessity is the mother of invention. And so if I can't find the workers or I'm a contractor, I'm going to move toward more automation. I'm going to move toward robotics or other forms of automation to displace those human beings. Now, some of that's going to happen anyway, of course, I mean, because of the profit maximization motive. But some of that is being artificially induced by the fact that we're not training enough young people for the skilled trades. It's really not society's fault. In many cases, it's the young people themselves who don't want to access these opportunities. They're just not interested in opportunities in construction, manufacturing, logistics, so on and so forth, even though in many cases, these are middle-income jobs or better. A good welder in this country can make low six figures, but there are not nearly enough welders in this country, and machinists and truck drivers and mechanics, and we could go on and on and on. But there's this big complaint in America about this disappearing middle class. Well, the middle class may have gotten smaller over time. That's true. But there's still lots of middle class job opportunities out there that go begging each and every day.
Hmm. And yeah, you touched a little bit on technology. How much should companies, construction firms invest in systems, that streamline, and automate, back office functions as well as the actual work of construction?
So back office functions are actually pretty easy to automate, as it turns out, right? There's lots of technology, lots of software that I don't need an accountant anymore. TurboTax can do the taxes. I don't need a payroll professional. I can outsource that to some a company that handles that with their technology, their platform. So that's actually easier, and we see that
Hmm.
in white collar and blue collar segments. But the main aspect, the primary role of a construction firm is to deliver construction services.
Hmm.
It's still about drywalling. It's about installing, mechanical systems. It's about, installing windows or putting it on roofing tiles or laying down, whatever, surface on roadways. And so, whatever material on roadways. So, question is, how much can that be automated?
Hmm.
And which firms are going to gravitate most rapidly toward those new technologies, whether it's robots that lay brick, and there are robots that can now lay brick. They're not very good at corners, as it turns out, but they can lay brick. So my guess is that the larger firms, the larger the firm, the more likely they are to automate their production technologies, their production, either through robotics or other mechanisms using drones or whatever it happens to be. And they're going to therefore gain cost advantages over time over their smaller counterparts. And we're going to see a lot of consolidation in the construction industry because only the largest firms will be able to afford the best technology, and smaller firms will be left behind in terms of competing on the basis of cost.
Gotcha. Um, we mentioned a little bit about the supply chain earlier. This pandemic showed the need for a sturdy supply chain, and as we saw material shortages and rising prices in 2020. Uh, how will those issues progress in 2021? Are there any signs that are pointing to them improving? Have they improved already? What's the situation with shortages?
Well, it's not clear to me that we have shortages
Hmm.
as much. I mean, supply chains have found a way to be reconnected. Obviously, we had all of those issues, and not just in construction, by the way. You might remember we had a crisis in the production of meat early in the crisis. Meat prices took off, softwood lumber prices took off last year. But what we have seen is that supply chains are basically functioning around the world. I mean, the U.S. economy grew during the latter half of last year, and part of that is because there was a lot of e-commerce, a lot of online commerce, which is indicative that the supply chain, broadly speaking, is still working.
Hmm.
Here's the issue, though. What's about to happen is that demand is going to surge as vaccinations continue to permeate the global population and as various national economies reopen in earnest, including, of course, the United States. On top of that, we have so much monetary and fiscal stimulus behind us that this economy is going to get a shove forward into that post-pandemic world. And then demand for commodities is going to rise by leaps and bounds. And while I'm suggesting that much of the supply chain has repaired itself, that's not true in all cases, of course. And so is the supply chain ready to deal with the surge in demand? I doubt it, because the
Hmm.
demand is just going to be so potent, that demand growth. So could you see further increases in materials prices? Oh, definitely. In fact, we
Hmm.
received data, as it turns out this morning, in the morning of our conversation here, suggesting that materials prices really climbed pretty rapidly in February, are up meaningfully, nearly 8% on a year-over-year basis, and it's softwood lumber. It's steel and iron. It's petroleum. It's natural gas, and it's copper. Yeah, and you might see more of that over the next few quarters.
Yeah, and I know based on previous projections, as backlog builds up and the economy as a whole rebounds, how should contractors navigate possible negative effects such as inflation? Kind of like what you're saying. How long do you expect kind of a period of inflation to persist and before prices kind of stabilize again?
So this is very important because it is the case that many contractors right now probably feel that their backlog is not what they want it to be. And
Hmm.
that, many have suffered project postponements and cancellations, and it depends upon the part of the country they're in and the segment they operate in. But they'd like to build back that backlog. They want to get back to where they had been pre-pandemic.
Hmm.
And so, what's the temptation here? It's to make offers that are really appealing, to try to minimize the profit margin, to put in fewer contingencies into the contract. Here's the problem. If, in fact, materials prices surge going forward, and if, in fact, labor costs are going to continue to be high because there is this shortage of skilled craftspeople, then if contractors take on all the risk of those cost increases going forward, whether it's diesel fuel or whatever it happens to be, they might come to regret that. And so what they really need to think about is how they can protect themselves while continuing to get busier, while continuing to enter into contractual obligations. And that might mean consulting an attorney. And I know no one likes to pay legal fees. No one does. Some people like to be paid legal fees, but no one likes to pay them. And so this is a treacherous period for contractors. So what we've been saying is contractor beware. Materials price increases that are very sharp in nature are possible, and you don't want to bear in the entirety of that risk. Some of that should be passed along to project owners, but there's a temptation right now to not pass that along to project owners because people want to rebuild their backlog.
Gotcha. And while we're talking about backlog, I know ABC reported in February that the construction backlog has been built back up to 8.2 months. Is there like a good target number the industry should aim for or be on the lookout for in terms of construction backlog? And how long should we expect the backlog how long until the backlog rises to pre-pandemic levels?
Yeah, 8.2 months is not a bad reading at all. What we had coming into the crisis were some near record numbers in terms of backlog based on the history of the series. So, there's a limit to how much backlog can grow, right? What is backlog? It's the amount of work under contract that's yet to be performed. And so there are times when you have these major 2 and 3 year contracts where the work is set to be performed in 2 or 3 years, but it's not that common necessarily. So in any case, that's a perfectly adequate number, and based on all the stimulus that's out there and some of these segments we've talked about, public construction, data centers, healthcare, fulfillment centers, so on and so forth. Backlog could grow at some point, significantly later this year, and could get us back to those pre-pandemic levels. But again, right now, there's a lot of things happening in the data. So backlog has come back, but here's a question: how many contractors have failed in the last year? Because these are firms that might have been reporting their data, pre-pandemic. Now they find there's zero backlog, they're done, but they're not reporting anymore in the survey. They don't exist anymore. You can get some funny things in the data, but I would expect backlog to edge higher over the course of the balance of the year.
Okay. So a few more questions for you, then I'll let you go. One that I wish I asked earlier while we were still talking about 2020. But at what point during the past year do you think construction reached like its darkest hour? You mentioned last February to April, we lost a big chunk of jobs. But what was like the darkest hour in 2020, and what changed to allow things to improve as they have?
Yeah, I think around the very late spring was the darkest moment for construction overall. At that time, lots of project postponements. Wasn't clear how the economy was going to respond. People certainly did not expect the stock market to boom. They didn't know what was going to happen during a presidential election year in terms of stimulus. Whether the parties would come together. I mean, there's a lot of uncertainty. I mean, we received a stimulus in December of 2020. For instance, during a lame duck session after that contested, heated presidential election, where Republicans and Democrats, can never get together, of course, but even less so after that presidential election, and yet they still got stimulus done. So last year worked out much better than people thought. But yes, there was that moment of insecurity and uncertainty in March and April, that late spring, and I think those were the darkest days, and that preceded the building boom in residential on the residential side. And some of the stabilization of the broader economy and supply chain. So I would say that was this nadir, and that was now almost a year ago.
Oof, can't believe it. So looking forward, the phrase "out of the woods" comes to mind, and I won't assume that we're past all the economic struggles yet. But can the construction industry, like see the edge of the woods yet? Are we anywhere close to the clearing? Looking forward, how optimistic should the industry be?
Well, I think in the near term, it is still the case that we're in the midst of this global pandemic. There's still going to be interruptions on the job site. Some developers are going to be nervous that, about what life is going to look like post-pandemic. How many people are coming back to offices? How will business travel recover? Are there going to be new retailers to replace the ones that have gone bankrupt or closing stores? Those kinds of things. So there's that. But with all of the stimulus in place, I would have to think that over the next few months, a lot of contractors are going to find more bidding opportunities, are going to have more opportunities to build back that backlog. And so as we march toward 2022, I think the outlook is pretty benign. And I think 2022 and 2023, from my perspective right now, are looking quite fabulous because all that stimulus continues to roll into the economy even as late as those dates. Here's the thing, though. We are so aggressive in stimulating this economy fiscally and monetarily that we're risking inflation and much higher interest rates. And at some point, once the stimulus is behind us, we might be in a world in which borrowing costs, the cost of capital, are much higher. And that would be really bad for construction. So what I would say to contractors is, look, right now, difficult time. It's there's still lockdowns in place. The economy is not really ready to take off. Later this year, it's going to take off. That'll set the stage for better 2022 into 2023 for construction, including non-residential construction. But beyond that, the outlook is really quite murky because we just don't know what financial systems and financial markets will do, given the possibility of significant inflationary pressure, something we haven't had to deal with for about 40 years now, and it could be coming back to a certain extent.
Okay. And you mentioned later this year and also 2022, 2023 looking fabulous. If you were to put like a prediction of time, when would you consider a realistic point for kind of returning to normalcy? Would is it as soon as later in 2021?
No, I don't think so. Not quite so quick. Remember, one of the things that's happened is that 4.3 million Americans have left the workforce. They're not working and not looking for work. So it's going to take some time for some of those folks to get reintegrated into the labor market, to find employers, and that takes time. So I wouldn't say later this year necessarily we get back to where we had been pre-pandemic, but I could say by 2022 and certainly 2023, we could be saying once again this economy is really strong, and we could be talking about an overheating economy by that point. So it's going to take some time, but we're going to be able to go to football stadiums this fall and see the Ravens and the other teams. I think the Ravens are the ones that really matter. So it's going to feel pretty good even later this year. But I think it's going to take a little bit longer to get back to where we had been, of course.
Dr. Basu, those are all the questions I had. So I just want to thank you again for taking the time out of your day. And I think we're going to be running this interview at the end of March, right as quarter one ends. So I think it'll be a great way to look forward to Q2. Thank you again.
Oh, thank you. It's been a privilege.
All right. Have a great one.
All right.